last week. Again, thanks, Michael Booth. I know you're on. I thought that was very interesting. He had some good points to say, some good talking points. I look forward to any other parties that want to come in and have a chat about their platforms and stuff. But more importantly, we got to understand what's going on in our province as it pertains to the electoral system and who the party leaders are and what they stand for. Because if you don't vote, you get what you get. And that would be a shame in such a free country that we live in, that some of us decide not to vote. So get out there and get your voices heard, because that's the only way we're going to keep moving ahead. Without delay, here's Ken. Come on in.
So how's everybody today?
Doing great, yeah.
That's good. It's good seeing you guys. Thank you. So I guess today we're, Doug's asked me to talk a little bit about some taxes that affect real estate, because every time we turn around, there's another tax that you guys are putting up with. So like right now, just off the top of my head, we have GST, we have property transfer tax, with the foreign buyers ban, which has just been extended. We have the underutilized housing tax, which is federal tax. The BC speculation vacancy tax. You have the empty homes tax here. You have the anti-flipping federal tax. You now are going to have an anti-flipping BC tax. So yeah, that's just a few of the ones that we've just kind of run across.
Is the anti-flipping federal one new? I didn't.
Yeah, it's new.
So it's along with they both got one. Oh,
Yeah,
they stuck another one.
The other one is actually from January 1 last year.
Okay, the federal one?
Yeah. So the thing is that like almost no one knows about the federal tax. It's been in existence now. It's a year, actually, over a year. And it's a tax that the feds put in, which is a 1-year limit. This is they call it residential property flipping tax. This is a federal one. So every time I sign up a client who's bought a property, I always tell them, if you sell your property in the next year, you're going to pay a tax on this to the federal government. And so, no, I'm living here. This is my principal residence. No, you're probably going to pay a tax to the federal government if you make a profit. So this so-called anti-flipping tax that the feds put in, it's really unnecessary because there already was a flipping tax before. So in other words, we've had a lot of clients over the years where you buy a house, you renovate it, you sell it next year, and you do it again and again and again. So the way it's kind of worked for most people, if you let a couple of years go by and then you do it, generally CRA would just sort of let it go, say every 2 or 3 or 4 years. If you were doing it too often, then they could simply say, you know what, this is not your principal residence. This is a business, you're in the house renovating business, and we're going to disallow all of your principal residence exemptions. We're going to tax you for the whole thing as business income. And I actually had a client of mine who did that. He'd done 4 or 5 of these in a row. And he actually went on a radio program. He called in and told everyone how to do this. And believe it or not, someone recognized his voice, reported him to CRA, and they audited him and they disallowed all 4 or 5 of his transactions as a row, $80,000, $90,000, $100,000 worth of tax. So he appealed that to the tax court and he lost. And then he appealed it to the federal tax court and he won. So they said, well, you're a school teacher, you're not a realtor, you're not a builder, and we're going to let this one go. So this took them like $60,000, $70,000 worth of legal fees and a lot of pain in the neck. So my view to people is, if you make profit, shut your mouth. It's no one's business except yours and your bankers. So the bottom line is, so that tax has always been on the books. If you're carrying on a commercial venture of buying and flipping houses, even though you're living in them, you're still liable. You could be taxed as a business income. But this flipping tax, this is a little bit different. It doesn't matter if you're flipped any other houses. You buy a house today and you sell it in a month from now or 6 months from now, you're going to pay tax on it if you make a profit. Okay. Now there's some exemptions. They list a series of exemptions here.
Question there.
Yep.
If you make a profit, what about these assignments? If they put their unit up for assignment contract, sometimes they can't sell it, the assignment, so they'll close on the deal and then they'll sell it yeah. So they would only be taxed on that if they made a profit on that.
That's right. So the thing is, these flipping taxes are designed to take away the incentive for doing it. So if you make profit on it, you're gonna pay, in this case, not capital gains tax, full business income tax. Okay, so most times when you sell a piece of real estate, you hold it for a while, that's usually a capital gain unless you're in the business of flipping these things. But in this case of the federal anti-flipping tax, it's deemed to be business income. Okay. Again, there's some exceptions. If someone died, if there's a marital breakdown, so a divorce, it says a threat to personal safety, if you're selling for that reason. If you have a serious disability or illness, or you've been terminated from your employment, or you've been relocated in a certain, there's some certain requirements for relocation. If you become insolvent or bankrupt, or your property's been expropriated, then you can be exempted from the federal tax. So again, doesn't mean for sure that you're going to pay it, but there's a possibility you're going to pay it. And the fact is, almost no one knows that tax exists, which is kind of curious. So it didn't get a lot of play in the maybe the BC government didn't know that either. That's why they're going to put in their own flipping tax, which is a little bit different. Yeah. So the bottom line is the interesting part of this. So let's say you buy a house, you don't like it, 6 months from now you sell it, but in the meantime the market's gone up. You're going to pay business tax on this particular transaction. Now, what happens if the market went down and you lost a bunch of money? Can you write off the loss? No. Yeah. This sort of undoes accounting rules. Because it's kind of like, here, you guys have a business. If you make a profit, you pay tax. If you lose money, you can write that off against future profits. No, not with this one.
What about if you bought a property, you did a bunch of renovations, and you write off the renovation?
If you resell it during the first year.
Yeah, let's say you bought a place and renovated it, and I sold it for $100,000 more, but I paid $50,000 rental.
Well, see,
right off the 50 grand rental.
Well, that's a good question. I mean, the whole point of this particular flipping thing is to discourage you from doing exactly that. So in that case, you probably want to keep it more than a year. Then you could sell it and probably pay a capital gain. But during the first year, it's not.
It's not good though. We should be able to renovate a place and sell it. I mean, that's not a bad thing. You know, it's the guys that buy a place from a little lady or something and then resell it for do nothing to it. Make those guys I don't agree with, but somebody who takes the time and effort to renovate a place and then sell it all, there should be different rules. They should be able to write that off at least.
Well, you see, the thing is, when you sell a property, if you, let's say, buy a property and renovate it, keep it for a couple of years, you put in $100,000 worth of renos. When you sell it, your original purchase price is called your adjusted cost base. Okay, so you can add those renos on top of the cost base. When you're going to pay a capital gain, you're not going to pay business income. So you guys all know the difference between a capital gain and regular business income. So capital gains 50% tax free. So you make $100,000 capital gain, you pay tax on half. Make $100,000 income, you pay tax on all of it. So it's a big difference whether you're dealing with capital gain or whether you're dealing with business income. So this anti-flipping tax, it makes it business income. So there's no capital gain in the first year. So probably done, my guess is you'd be not writing that off. Waited the year.
First 2 years.
First year. Federal one is 1 year.
And the provincial is 2.
Right. You see, these are overlapping now. This is the problem, is that the governments, either they don't know what the other government's doing or they don't care. Because you now have 2 anti-flipping taxes, one federal, one provincial.
So does that mean you pay twice?
Sorry?
So do you pay twice?
Yeah, absolutely.
Okay.
Yeah, so like if you live in Vancouver, you have the speculation and vacancy tax and you have the empty homes tax. So if you want to leave your place empty, you're going to pay 0.5% or 2% if you're a foreign buyer, foreign owner, for the spec tax, and you're going to pay 3% for the empty homes tax, which is soon going to go up to 5%. So you've got both. So this idea of this legislation that overlaps, it's like the governments aren't paying attention to each other. Because you already have the legislation, so there's no reason that this BC tax should be in existence, this anti-flipping tax, unless they don't know there's federal
Not a problem.
The capital gain,
You want money to be
2%
different.
taxable comes on top of the personal
yeah.
income of the owner. or that is-
Sorry, didn't get that.
The capital gain, which is 50% taxable, it comes on top of the personal income? or-
Yes, so capital gain, if you realize a capital gain, let's say you sell a property this year, you made $100,000 on it. And it turns out we're not in the first year, we've actually owned it a couple of years, then you're gonna add $50,000 into your income for this year, but you're gonna pay the tax next year. Because you're always a year in the future. So you realize the capital gains this year, you pay the tax on it next year. And again, the good thing about capital gains for now is half of it's tax-free. That's why everybody wants to categorize everything as a capital gain instead of just straight business income.
But still not on your personal residence,
Right, for now.
but yeah.
So you're right, someone made a comment, well, the government's broke. Yes, governments are both, federal government and the BC government are both running big deficits. BC is gonna run a deficit this year of $7 or $8 billion. That's the biggest deficit in the history of BC for a year. And the federal government's gonna run 40 billion in the ditch. Okay, which is not the biggest one. They ran 380 billion during COVID. So that bottom line is BC's, I think you guys had Kevin Pazder, right? And I think I watched his thing on After the Fact. He mentioned that the BC government has doubled the deficit here in BC since the NDP's been in power. It's gone from 50 billion to 100 billion.
It's a good point.
And the federal government, since Trudeau's been in, he's doubled the deficit from about 680 billion to 1.2 trillion. So the problem is someone has to pay the interest. Okay, so BC, I think the feds were paying almost $50 billion a year interest now on federal debt. So this is,
Not about the interest, but what about the principal?
well, no, that's paying down. That's gone. That's long.
Yeah.
There's no way anyone's gonna balance budgets anymore. That's a thing of the past. So as long as you can debt service it, they don't care. So,
Sorry, Ken.
you're old school.
If I did that, I'd be out in the 4th Street, I'd be in bankrupt.
Well, we'd all would be, but the difference is when you guys don't balance your budget, you go bankrupt. When the government doesn't do it, they just raise your taxes.
Yeah.
And print more money.
Get more money. That's exactly what's happening.
Excuse me.
So these.
There's a question on Zoom.
Sure. go
You
ahead.
can go ahead. What is percentage for federal, like capital gain? What is the figure you have to pay?
percentage
For example,
federal?
you make 100,000 for that property if you want to sell it. Because I have a buyer that he want to buy it and flip it, but I just want to make sure what he had to pay percentage for the capital gain on federal tax.
So what is the percentage on a federal capital gain?
Percentage.
Yes.
Say, when you pay a capital gain, as I said, half of it's tax-free. So that money is included in your income for this year at your marginal tax rate. So in BC, the top marginal tax rate is 53%. So that would be added into your income for this year at the 53%.
53%, Hannah.
Okay, thank you.
So everybody has a marginal tax rate. You guys all know the less you make, the less tax, and then it goes up and up and up. BC, it's 53% at the top end. So that means you're keeping 47 cents out of every dollar you make. And then on top of that, you're paying the GST, GTT, and all the other gas taxes on top of that. So my personal view is I think your top marginal tax rate in BC is about 75%. So bottom line, it is what it is. We're stuck with that, guys. But as far as what you guys need to know as a realtor, okay, so there is this federal anti-flipping tax, which means just tell your clients, look, if you sell your principal residence in the first year, subject to these exemptions, there's a few exemptions, you're probably going to pay tax on it. So maybe wait a year and then you're exempt from the federal tax. Okay, so that's something to sort of keep in mind. It's been in existence, like I said, from January last year, not January this year. Nobody seems to know about it because it's federal law and people don't pay attention to that.
So the BC flipping taxes this year?
Yeah, what I can gather from reading the materials, it's not enforced yet. It's supposed to be enforced January next year. But it seems to, the way I read their law is that it seems to be retroactive.
Yeah.
So that if you bought a property today, there is no anti-flipping tax in BC today, but you sold it after January 1 next year, you're gonna pay the BC tax. Because it goes backwards. That what most legislation should do, if you're a proper government, it's always forward. You say, as of January 1 next year, if you sell your property, here's the rules. But BC has done this twice now. If you guys remember the speculation vacancy tax brought in 2018. They made it retroactive.
And foreign buyers tax.
Christie did something.
Well, Christie gave a week though. She gave 1 week notice.
Oh, yeah.
So she didn't make it retroactive. She said January 1, July, I think it was July 15th comes into force, but she told everybody July 7th. So she didn't make it retroactive, but she only gave a 1 week notice. But these other ones are worse. They go backwards. So if you left your property vacant in BC in 2018, in January, there was no spec tax. But then in November, they brought in the spec tax and said, well, too bad, 8 months ago, you're getting tagged. So it seems to me that the way I read this, and again, I haven't seen the legislation because they don't have it yet. All you get is the stuff off the BC government's website, but it appears to go backwards. So again, it's something you warn your clients, if you're buying a property now, you could get dinged with the federal tax, and you could also get dinged with the BC tax, which doesn't exist yet. Okay. So, and the other thing about the BC tax, it's 20% tax, and then in the second year, this is a 2-year window. So the federal one is 1 year, and then you're out of the woods. The BC tax is going to be 2 years. The first year, you got 20% tax on the quote unquote income. It doesn't really say what that is. And then the second year, it sort of dwindles down. So by the end of year 2, it goes away. So again, looking at the materials, because it's pretty new, they've just introduced that in the budget the other day. It says you pay this 20% tax on the income from the property sale. What is that? Does that mean net income? You get to write off your real estate commission, your legal fees, whatever else, moving costs. It doesn't really say. Yeah.
Is it the profits? I don't know.
Well, see, that's what I'm saying. I don't know the answer because it just says 20% on the income. What does that mean? I would assume it would mean net income. Because,
Shouldn't they change that to profit then?
well, again, this is just the material that's all out of the government.
That means potentially they will be charged 70% if they make a high tax benefit. 50% from the federal and 20% BC.
No, not quite. So the federal flipping tax is 1%.
Oh, one.
Okay, and the BC tax would be 20% on the income, whatever that is. So that could be like 21%. But again, it's hard to say what these numbers are. Same thing with the federal tax. You know, you say, okay, well, you know, do I get to shrink, as you said, shrink this profit down? Because I have a real estate commission, I have legal fees, I have this, I have that. I don't know, because I haven't seen anyone do it yet. So again, all you can assume for now, take the worst case scenario, that yes, you could get dinged for the federal tax, yes, you could get dinged for the BC 20%. Whatever that is hard to say.
You said federal is 1%.
Yeah.
But that's not that bad.
Well, it should be 0.
It should be 0, but it's not 20% like the BC one
Yeah.
is going to be.
Yeah, I agree.
Yeah.
I agree. But still, you know,
Yeah.
Is it 1% of the sale price or is it 1% of the lift?
Sale price.
sale price.
Okay, then it's 20% of the profit. You're comparing an apple to an orange.
It's supposed to be
1% is 1%, but
Yes, let's see what they say about this guy flipping, you know, residential property. Yeah, so there goes your capital gains exemption. There's some exemptions, yeah. So the thing is, I mean, it just like I guess the whole point of these two taxes is so you keep your property for up to 2 years before you resell. Again, the vast majority of people already do that. It's like most people you just bought your property today, it's unlikely you're going to sell this year, probably unlikely you're going to sell next year. But the problem is the government just keeps introducing another tax to say, well, here's another incentive for you. And again, I think these are incentives that it's kind of like you're fixing a problem that doesn't exist. Because honestly, we've done tens of thousands of real estate deals. The amount of people that flip houses is very small.
Less than 2% what the numbers are.
You're right, could be very small. Again, there's your flipper types who do the renovations, but they're already subject to the the legislation already. They could already have that turned into business income. So for this 2%, then everybody gets to saddle with this. Okay, this is just crazy. It's like the SPAC tax where they say, oh, 99% of people in BC are exempt. Well, why are we all having to do a SPAC tax separation? Why don't you just have the 1% who don't qualify, once you make them do? So again, you see, this is the irony is, oh, for this tiny amount of people, we're gonna change the whole legislation for everyone. This doesn't seem fair.
And there's election.
Let's see, there's 2 elections. We have the BC election coming up in 6 or 8 months, and we have the federal election coming up in a year and 6 months.
So this is just another.
Could be.
Sort of say, hey, the number one issue in province housing, look it up, we're doing something else. That
Well,
doesn't make any sense.
No, I agree. If you look at the current NDP government here, they said right when they were elected, they were gonna fix housing. They had a 30-point plan for fixing housing and making rental affordable. So what's happened since they've been in office? We have cheap housing and we have very low rent. Right, so anyway, that's the bottom line. So yeah, you bring these things out, and of course Trudeau's taken the position all along, housing's a provincial matter, it's got nothing to do with us. Now he's getting a lot of blowback on it, so here comes the anti-flipping tax, here comes this, here comes that, because here comes an election. And I'm being cynical, maybe that's not the case, but
What do you mean by blowback?
well, it means he's getting flack from people saying, well, we can't afford housing in Canada, and what are you gonna do about it? Before he said, well, it's not my problem, it's province, province go to vote on your finger. Yeah.
He's flip-flopped.
Yeah, well, that's normal for politicians, but. So the thing is, so that's, you know, that's these 2 new, this PC anti-flipping tax, so you're getting both of those. And you still have the speculation vacancy tax, you still have in Vancouver, the empty homes tax. We have this foreign buyers ban, so again, if any of you guys are.
The foreign buyers, is that across Canada? Is it?
Yeah.
Yeah.
So again, that's federal law. And so that just means if you're a non-resident of Canada, a non-permanent resident or non-citizen, you have to jump through a bunch of hoops to buy a residential property in Canada. And again, commercial is exempt.
Have you had anybody do that yet?
Oh, yeah.
In your office?
We've had a few.
It's a non-resident.
Yeah, we've had a few, but the problem, I think, I'm not sure if I mentioned this last time I was here. There's a number of kind of hurdles if you're trying to buy a property in Canada and you're not a resident, you're not a Canadian citizen. So the first hurdle is that foreign buyer's ban. So again, you have some things you could say, well, there's some exemptions. If you have a study permit, you know, for a foreign student, there's some exemptions for a work permit. You have to have 180 days left on your work permit. You can be exempt from that ban. If your spouse is a Canadian citizen or a permanent resident, you're exempt from that ban. So there's some
What
loopholes.
about if you apply for PR? Permanent resident.
Yeah, that's not good enough.
Not good enough.
That doesn't do it for you. You have to have the work permit as well. You could still apply while you have the work permit, but you have to use the work permit exemption. So the thing about the foreign buyers ban is we've had quite a few clients, quite a few realtors phone us and say, well, my guy is foreign and can he get in? And so if we find an exemption, yeah, he's got a work permit, or his spouse is a Canadian. You say, okay, well, you jump that hurdle. So then what's the next hurdle, you guys think? So you, okay, I can buy, now what?
20%.
Was tax stipend or if you're not gonna use.
Yeah, that's the third one, but there's another one in between.
Foreign buyers tax.
Foreign buyers tax, exactly.
Oh, yeah.
So remember Christy Clark, 2016 brought in the foreign buyers tax, 15% at the time. And again, she did give it week's notice. Better than nothing.
And the day before it came in.
Yeah, it was really busy that week.
They become a permanent resident within a year after paying the foreign buyers tax. Can they request a refund?
Yes, you can get a refund. If you pay the foreign buyers tax and you become a permanent resident within a year of closing, then you can get the tax back. Now, for anybody that's done any immigration work or knows anyone that's tried to do this stuff, there is no way anyone can guarantee that you're gonna get your immigration PR status within a year. Like it's just a crapshoot. So don't hang your hat on that. If it's a bonus if you get the tax back, but It's very difficult. We had a case 2 years ago where the realtor's being sued, the broker's being sued because they told my client that she was exempt from the foreign buyer's tax because she had some kind of PR work permit or something. She'd gone through some immigration program and they were wrong. She went through the wrong program. That was the one that the BC nominee program is the one that exempts you from the tax in BC. But she went through some other federal program, didn't make her exempt. So she had her PR application already in the works for 6 or 8 months. So we got an extension on the deal, then we got another extension on the deal, and then the vendor just got screw it. We're terminating the contract. She lost $80,000 on her deposit. They let her keep 20. This was the irony. They let her keep 20,000. So we were able to get 20 back, but they kept the other 80. And then she sued the realtor and the broker for telling her that she was exempt.
How'd that turn out, you know?
I think the insurance companies paid. So,
You know,
so the point is, don't tell someone they're exempt if you don't know, because they're gonna rely on that, and then they're gonna make an offer, and then they're gonna find out later they're not exempt. Okay, so there's so many, it's like a minefield. So the bottom line is you get through the foreign buyers ban, now you have the additional property transfer tax, which you guys would call the foreign buyers tax in BC. That's 20% on the value you purchase. So you say, okay, well, that exemption for 20% BC is you have to be a permanent resident, or you have to be a citizen, or you have to be under this provincial nominee program. That's the only 3. So it doesn't mean just because you've got over the foreign buyers tax that you're exempt from the BC foreign buyers tax. So you got through the ban, but here's another one. This is provincial. So you have to tell your client, okay, well, you can buy, but how are we going to deal with the 20%? So what are you going to do? Your guys are not going to be happy to get dinged, on $1 million property, an extra 200 grand of property transfer tax. So that's the second hurdle. So we've had some that stop there, saying, no, I'm not paying that. I can't afford that. Okay, so and again, there's some things. Okay, let's say you're using the one. Let's say you're using the one where your spouse is a Canadian. So it's okay. Well, my wife's Canadian and I'm not, so we can skirt the foreign buyers ban, and then we'll just go 99.1 on the transfer. So my wife will go 99% and I'll go 1%, and we're good. Okay, so we only pay foreign buyers tax on 1%. That's not a sure thing anymore, because the BC government now, since putting in this 20% foreign buyers tax, they've got an audit provision where they can audit your file for 6 years. So when they come back, there's a provision in the Property Transfer Tax Act called the anti-avoidance rules. And it says if you are taking a measure simply to avoid tax, that's not good. You're going to get dinged with a penalty and a fine and all kinds of things, unless you have a legitimate business reason to do something. And so what you and your spouse, as far as I'm concerned, that's your business, how you want to go on the title. But the government says, no, it's actually our business. So if you can show a good business reason why your wife is 1%, you're 99%, you're exempt and she's not, okay, well, look at that. If you can't, we may just audit the whole thing and say you're going to get this huge penalty, big fine. Actually, there might even be jail time. I don't know. Goes to jail.
If they're joint tenants, that would be 50-50, so we just on 50%.
Yeah, they would
Yeah.
probably make it 50, but says who? Why should I be able to tell you how you and your spouse are gonna go on the title? Now, most spouses do go 50-50, but they don't have to. Maybe they just got married and maybe the husband put in all the money and the wife didn't, or vice versa. Or maybe there's all kinds of reasons why a spouse, could be your second marriage, your third marriage, there's just reasons you don't want to go 50-50 and you don't want to be joint tenants. But that's your business, right? That's what you and your lawyer, you talk it over and say, how do we want to do it? But the government may make it its business, so it's not a slam dunk that you can just go, we'll put you 99% and we'll put you 1%, and you're good. So you're gonna pretty well jump through the foreign buyers tax. Okay, so let's say you get through that one. Then you're right. Your point is the empty homes tax and the spec tax. What are you going to do with the property? Are you going to live there? Are you going to make sure you have these two taxes? Make sure you have to have the property occupied for 6 months a year. Okay, so this is a difficulty in Vancouver and the other parts of BC where the spec tax works. Is, if you don't do that, you get penalized. 3% in Vancouver, 0.5% in the rest. That's 0.5% of the assessed value. BC and Vancouver would be 3% of the assessed value. So the other thing about the speculation and vacancy tax, this is really weird, is if you're still making most of your money outside of Canada, even though you moved to Canada, even though you both live in Canada, you're gonna get dinged on the spec tax.
Even if you're living in the property?
Yeah.
If you're not paying, if you're not filing your taxes, I got clients from
So
in Coal Harbor, they have to pay respect.
in fact, even if you're,
They don't file the tax.
so let's say you just put the wife on the title, okay, if the husband makes more money than the wife pays his taxes in the US, he's not even on the title, you're paying the spec tax.
How's that even possible?
What?
She's the owner, he's not the owner.
Doesn't matter.
Yeah.
Because what they mean is it's a family units. The way they look at your income under the spec tax, it's the family is paying more tax outside of Canada or inside of Canada. That's the rule. So the fact is you and your husband are the family. Kids are not considered, brothers and sisters aren't considered. It's the family unit, husband and wife. So there was a case in BC a few years ago where the wife lived in the property somewhere up in Victoria, and she married a guy in the US, and he's still working in the US. She's the only one on the title. She's the only one ever been on the title. Now she's getting stuck with the spec tax. Because the combined total of her income and his income, more taxes paid outside of Canada. So again, so there's like 3 things you have to jump over just to get to the point of some foreign guy wants to buy some real estate here.
If you're a Canadian citizen, but you do not live in. Do you have to-
What are you gonna find? Canadian citizens fine. For the foreign buyer ban,
Yeah.
you're good. For the BC foreign buyers tax, you're good. But you might get caught by the speculation vacancy tax or the empty homes tax. You might get that, because if you're not making your money here, you can still get dinged if you're a Canadian citizen.
My guy, if they don't file their taxes in BC and they pay it, and they live here and they get charged.
Yeah, so you
File any tax.
So where this whole thing came from for the BC spec tax, they don't want to say it, but if you guys remember back 16, 17, 18, there was a whole bunch of foreign money piling into BC, which is why they brought in the foreign buyers tax, which is ironic because Christy Clark and the group were going to Hong Kong repeatedly on these trade missions to say, come here and buy every single thing you can get your hands on in British Columbia. Buy towers, like don't buy 1 unit, buy a floor, buy 2 floors. So they would fly out to Hong Kong and do these dog and pony shows to get quote unquote investors to come here and buy property. So having done that so successfully, drove up the prices, well, we better do something because it's an election year. So they threw in the foreign buyers tax. So the thing is, you can't have it both ways. You can't invite the whole world to come and buy the real estate here and push it up and then go, oh my God, the prices are too high. You can't do the 2 things at the same time.
Did you hear anything about the PTE, the public project, the EV saying what they're doing, the NDP? Are they gonna raise that to $1 million?
Yeah, well, probably that's another change that, we've talked to, I've actually sent letters each year to the BC government saying, when are you going to increase the first time home buyers exemption? Which today, by the way, just today, is $500,000. And then it phases out slowly, 500 to 505, 510, when it gets to 525, it's 0. So again, it's the same thing, exempt to 500, and then it shrinks down at 525, it's nothing. Now, how many guys here sold a house that's under 525 recently? 0. See, none, it doesn't exist. So they kept telling us, well, no, we have no intention of changing that. It's not gonna happen. Now, as you said, there's an election coming up in the fall. We're gonna change it. Okay, so it's a new exemption, it's 835. So first time buyer.
They haven't promised $1 million.
But it's not really 835. So that's the smoke and mirrors.
Yeah.
What they should have done is said, now a first time buyer can buy a property at 835 fully exempt. Okay, so what does that mean when you're first time buyer? You can't have owned a property anywhere, anytime that you've lived
In the world.
in the world. Okay, not 5 years ago, not 10 years ago, 0. Secondly, you have to be a Canadian citizen, you have to be a permanent resident. You also have to live in the property. So you can't just say, oh, it's a revenue property, I'm not gonna live in it. You have to live in it for a year. So if you jump through all those hoops, you think now you can buy a property for $835 and you don't pay any tax. No, that's kind of what people think, but that's not true. You still get the $500,000 exemption. So the first 500 is exempt, but you pay tax on the difference between 500 and 835. So it's better than nothing, but it's not as good as kind of what people think. And then at eight, yeah, this is coming in. It should be
Not
April 1st.
affordability at all.
Yeah, not really.
People that need it are first time buyers, I really need that.
Totally. Totally.
They're skipping on them and screwing them and.
I totally agree with you,
I'm
Doug,
voting
but
for Kevin.
and then, so that's the, and then in the 835, it shrinks down. Yeah, so they start phasing out that 500,000 at 835 up to 860. At 860, it's gone. There's no exemption. But again, so when I first saw that, I thought, oh, good, you finally done it. You know, you exempt, no, you haven't done it. So this thing is, property transfer tax is $3.5 billion or so kind of hit for the BC government. It's like one of their biggest revenue sources. So they didn't want to give up too much. So they just, like I said, the first 500 is exempt, you pay tax on the rest, then at 835, it starts shrinking, 860, it's gone. And then
They're living on that path.
they are.
And that at the casinos.
Yeah.
And that's what they can't get rid of the casinos, they can't get rid of the path because that's what's paying all the bills.
Well, that's a good chunk of paying the bills. Yep.
Just to clarify, so 0% for property transfer tax on 500,000 on the 835, sorry, 335, that gets you to 835. You're paying what?
2%,
2%.
just regular property transfer tax.
So wait,
Well, no, you're still better off to have pieces like today, you bought a property for 835,000, there's no exemption at all, it's gone. So it's better, like I said, it's better than nothing, because you're at least getting to exempt the first 500, whereas today, once you're at 525,000, there's no exemptions.
oh, I
That's
see what you're
exempt.
saying. Okay.
So all they're doing is they're saying you can claim that 500 on a higher
Okay.
level property. We're not even increasing the $500,000 exemption. And Doug's totally right. The first time buyers, they need it. This is a big hit for them. So anyway, it is what it is. I think they've also going to increase the exemption for purchasing brand new property from a developer to, I believe it's 1.1 million. Right now, it's 750,000. Okay, so that's a plus. And then it also phases out over the next 50,000. So at 1.1 million, it goes down to 0 at 1.15.
What's the discrepancy between resale and resale?
The discrepancy.
Yeah, I mean, in a exemption amount, 750 versus 500.
Well, it's just the developers have a good in with the government, so they get a higher exemption. Really, there's no reason, you're totally right, they should be the same.
Exactly.
If you're gonna have a 1.1 for developers, you should have 1.1 for first buyers. But you see, it's all you guys are all taxpayers. I mean, you guys have to lobby the government, say, look, or either we need a new government and say, look, guys, we've had enough of this. People can't afford anything. So, yeah, there's a perfect case. Why don't we have a 1.1 for everything? Just across the board.
That's
Because well, there's plenty of properties here, yeah, that are $1 million, it's no big deal. But that's $1 million, that's like $18,000 property transfer tax. That's a lot.
Yeah, I think we need to, DPREA needs to step up a little bit.
Yep.
Realtors start being a little more vocal to the government, what's happening in this stuff. I don't think they say anything at all.
No, I agree. I mean, it's like, this is I'm gonna wander off topic here. We're a little too docile as Canadians, so we just let these guys pile on another tax. This federal underutilized housing tax, and we don't need that in Canada. We already have the spec tax and the empty homes tax. We need a federal tax as well. A lot of people didn't know that. Yeah. So the thing is, we just let the governments throw on more taxes and more regulation. No pushback. So maybe some of you guys should run politics. I don't know. Just to say, look,
We'd end up
guys,
the same anyway. I said I wasn't gonna tax it, but I'm going to.
well, you see, that's the other problem with politicians. They say one thing and then they get in office to do something else. There's nothing to do about it. So there's very little accountability. Yeah.
It's effective from April 1st.
April 1st, these changes in BC on these higher limits, they're April 1. So,
The
not too long.
resale is completing in March, if they postpone it.
Yeah, some people are postponing. it. So
Yeah,
we've had some people where they're closing toward the end of March, and they punted the thing for a couple of days to get into April. Now, technically, if you wanna split hairs, that's probably taxable. They're not under their legislation, because the only reason you're switching the date is to avoid the tax, or to get a higher exemption. So, you know, I don't know if they would take a run at that, but technically, that's why you're doing it. So a few clients have done that, but, yeah, so in other words, even if you wrote the contract today, but you're closing after April 1, you'll be fine. It's the closing date, not the day you wrote the contract. Okay, so yeah, so like I say, guys, you know, you got the GST, you got the property transfer tax, you got the additional tax, you got the foreign buyers ban, you got the, you know, the underutilized housing tax, you know, like it's just never stops. But so for you guys as realtors, though, it's just good to be aware of them. Say, okay, well, I know about all these things. It's not your job to be a tax expert, but it's good to know about it, so your client at least say, hey,
Yeah,
guess
do you have
what?
anything on your website that we could refer somebody to kind of,
Little write-up like that, quick little PDF file.
you
that
know,
would
then
be-
we could say, well, go to Ken's website here and he has a little bit about it. If you have any questions, oh, yeah.
Yeah, well, I have a lot of articles on the
Yeah.
website, like I put these things on all the time, but if you wanna like summarize it into like, here's 6 or 7 pieces of legislation you should know about. And here's the highlights of each one. Yeah, I can write a blog on that.
Perfect.
Shove it on
Yeah.
the
Amazing.
website.
Yeah.
Yeah, that'll be good, just to link.
Yeah.
Because, yeah, it's honestly, it's really hard for everybody to keep up. I mean, you guys have like one thing you're supposed to be doing, selling real estate.
Yeah.
But now all this other stuff's a distraction. But you have to know about it. You can't just ignore it and say, well, you know, too bad. We just sell the real estate. We don't care, because then your clients are gonna get impacted, and then they're not gonna have clients.
Well, it's like that guy that got sued, he told them the wrong information and then they're.
Yeah, well, see, people don't like surprises in real estate. That's the one thing. If you tell them you're gonna get stuck with 20%. You wanna go 99 and 1, this is what could happen. And guess what? We had one case where the guy, it's like a film guy from LA. He's putting in almost no money. His wife's putting in almost all the money. We can trace the money back into their bank accounts in the US. He's only going on the title to help her qualify for a mortgage. And we can document that with the broker, we can document that with the banks. They went 99. Okay, so we said, okay, if they want to challenge us, we have an argument, we have data, we can show where the money came from, we can show why the money is, why he's on the title only for 1%. So we did it. And then the interesting thing is he got his PR status during the year anyway. So we actually got the 20% back on his 1%.
Yeah.
So that was a fluke. But the thing is, you still have to tell a client, you can still get audited. You have a good argument, but it's just an argument. Doesn't mean you're gonna win, but at least you've got a position. It's the same thing with any government. You can take a filing position, that's what your accountant does. So, okay, we're gonna claim this exemption for you. And we have a reason, we have an argument, we have legitimate, we have paperwork. Doesn't mean we're gonna win, but we could lose, but then you're not gonna get dinged for fraud or for some tax evasion. You say, well, this is legitimate. They said, we don't agree. We'll give you half. Okay, fine. But you just can't do stuff with no argument. So, well, I put my wife on for 1% fine. To avoid the tax. Well, that doesn't count. That's not a good answer. So they'll say, guys, this is why you guys have a foreign buyer. Just, you know, maybe give us a call. We can talk to your guy, see if he can jump through all these hoops. So yeah, any questions?
Thanks for scaring us.
That's great. Sorry, guys. It's probably be a good year. So I assume you guys have, you know, mortgage brokers just telling you all the rates are coming down. They will. The market will be a good year. So we'll be fairly busy. So I don't want to throw cold water on everything. You guys are doing well.
Pretty much, if we have a client that's, I do have someone that's the same situation out of province and her dad helped her who's in Africa. So I could just get them to.
Yeah, just tell them to call us. We're happy to chat with them. And it's just something we'd rather avoid a problem first than have the problem blow up when the guy's closing.
There's a question on Zoom. If my client owns a house and wants to buy a commercial property for his business, what kind of tax will he have to pay?
On a commercial property?
Yes.
Well, there's GST always on a commercial property unless you're a resident, and you can sort of push it off into the future. So mostly GST also pay property transfer tax on that as well. So you're not exempt on it just because it's commercial, you still pay property transfer tax. You don't pay additional property transfer tax, though. That's the interesting thing. That extra 20%, you're not gonna pay that on commercial property. But again, so all of these legislation here that we've been talking about are mostly residential. And the downside is when you stop people from buying residential, then it's foreign money that just pushes it into commercial and farmland.
Stopping now, getting called.
Yeah.
It's all Alberta too.
Yeah, so
We're moving.
we're moving, yeah, we're going, let's go relocate. Okay, guys,
Well,
well,
thanks
thank
very
you.
much. Okay, so a couple takeaways. We're not lawyers and we're not accountants. So when you have that question, refer them to the specialist. 100%, I agree, everybody should go to Ken, best real estate lawyer in the marketplace. He said it, I said it again, there's 29,000 realtors in BC, 26,000 are active. We have a voice, we have a ton of customers, we got a ton of taxes that are coming in left, right, and center. And we need to be aware of what's coming down the pipe because it's becoming unaffordable. And I challenge anybody that's listening to this and everybody that's here is when this Zoom goes live, share it with everybody in your sphere of influence. They've got to hear this. We've been in this business for years and years and years, and we still don't know the taxes that are being charged and being added on because it's just nonstop. So again, go to the professionals, please. We're not a doctor. We don't give medical advice. We're real estate professionals. We help people find property that they want to buy. We help market and sell the property that they want to sell. And that's what our specialty is. So share this video. Be conscious of the taxes. Be conscious of who the politicians are that are coming into our provincial election and our federal election. Because you get what you vote for. If you don't vote, you don't have a say. I don't want to hear your complaints. Thank you so much.